the dark side of trading. Today, I'm going to tell you guys about the dark side of trading. The side of trading that no one wants to tell you about. Hey, for those of you who don't know me, I'm Rob. And for those of you who do know me, guess what? I'm still Rob. It's Coffee with Rob. So let's have a sip of coffee before we get started. It's all about trading, it's all about fun, but in the 30 years that I've been trading, I've seen a lot of things. I've seen traders come and go, I've seen the good and I've seen the bad. One thing I can tell you, the biggest thing in trading that people don't realize when they get into trading is that trading is incredibly lonely. It's the loneliest place you're ever going to be. And let me explain why. Let me go into a little bit of detail here and explain why trading is so lonely in the first place. Well, firstly, the obvious one is you're alone. You're trading by yourself. You haven't got a team of traders around you, unless, of course, you go and work in one of these trading offices, in which case, brilliant, then you're working with someone else. But if you're a retail trader and you're trading all by yourself and you got into this game because you thought, I saw a guy showing me Lamborghinis and money falling out the sky, and I went on a course and I paid a fortune for it and I became a trader. You went and sat at your desk and you became a trader. And the first thing you find out is the buck stops here. There is no one else. The buck stops here. It lands on your shoulders, nowhere else. And you're all alone. There's no one to talk to, no one to speak to, no one to bounce it off. You can't go and tell your family that your job is trading, because they'll think you're not working. They'll think you're joking with them. They'll look at you like you're an idiot or a gambler. Most of them will call you a gambler, or they'll think you're gambling. They won't understand that it's a natural career, and they won't understand that it's a natural job to be a retail trader. If you told them you're going to work for Morgan Stanley or BlackRock or something like that, and you're going to work in Wall Street or whatever the case, then they might believe that you've got a real job. And you got in your little three-piece suit every day and you put your tie on and you went off to work, then they might believe you're doing something. But if you're sitting behind your computer taking trades, no one's going to believe you. And it makes it an incredibly lonely place to be. Who do you speak to? I find myself over the last 30 years starting WhatsApp groups or having friends that trade and chatting to friends who trade during the day and bouncing things off each other. Groups of 4 or 5 guys or 4 or 5 people where we can literally chat to each other about taking trades or trading or whatever the case. But in that sense, you also have to have a situation where you must have like-minded traders with you, because traders never really agree on anything. At the end of the day, 2 traders in the same room will in all likelihood probably take different trades, because as I've told you guys before, trading's a 50-50 game and you're trading against traders, not bots and algorithms. I know a lot of you people disagree with me on the bots and algorithms thing. You seem to think that the computer's made up of electronics and maths and fractal and objectivity and algorithms and this type of thing, but effectively it's not. It's made up of human beings. And it's made up of people. That's one of the issues. Loneliness becomes a big thing. And then loneliness is the effect of the buck stops here. There's no one to turn to and say, what do I do now? I'm a bit lost here. I'm not really sure what to do next. You got to ask yourself that question. There's no one to ask, is there? That's why I have these YouTube channels and these live shows so that we can bounce things off each other. It really does help. But with loneliness and with the buck stops here, comes the next thing that's really lonely in the markets, and that is stress. Immense amounts of stress. You're going to suffer huge amounts of stress. What's stress caused by? It's caused by fear. Fear of loss. And fear of loss causes an adrenaline to move in your brain, or there's like a switch in your brain which switches on that stress, and you start worrying. If you've traded too much, you can't sleep at night. It keeps you awake all night. And that brings me to the next thing that's going to affect big time, and that is lack of money, or loss of money, or worrying about where the next buck is coming from. So many people get into trading and they had a job where they were getting paid every month, and that money that they were getting paid every month would pay the bills, it would pay the credit card bills, it would pay the car, it would pay the house, pay the electricity, pay the water. Am I mentioning just but a few things that you have to pay at the end of the month? Now you have to make that happen. That money has to appear out of the blue sky, because it ain't coming to you on a monthly basis if you're not trading really well. And when you start trading, it's going to take you a good couple of years before you figure out how to trade. You're not going to make money in the first couple of years. In all probability, you're actually probably going to lose money in the first couple of years. And this is where the dark side comes in. Now what you've got to do is make sure that you have enough cash on hand to plan for a whole year ahead. And in fact, if you're starting out at trading, perhaps 2 years ahead, so that by the time you get to that end point, and hopefully when you get to that end point, you've become a good trader, because did I mention that 70% of traders fail or lose money? In fact, no, 97 to 99% of traders actually fail and don't make it, particularly on the lower time frames. But you'll believe, because you're a trader, you'll believe that you're going to be in the top 3% or the top 1% of traders, and you're going to succeed. But have you got a plan B? If you go the full 2 years down the line, you get to that point and you've run out of money. Have you got a plan B for that? Do you have an exit plan? Better watch out for that scenario as well. But let's keep it simple and let's say that 70% fail and 30% do well. You'll probably believe that you're going to be part of the 30%, so you're going to do this anyway, because it's been your dream all of your life. I know for me, it was my dream to work for myself and to get out there and do it for myself. But when I started trading, I did have a plan B. I had my business running, my retail store. So I knew that if trading failed, I had my retail store to fall back on. That's very important, guys. You have to consider that, because if trading's all you've got, there's always the chance that 2 years down the line, you won't have an exit plan, and then you're going to be in seriously big trouble. What a lot of people do is they go on a course which costs them $5,000 or $3,000. What do courses cost? They're quite expensive. They go on these courses, and then they come back believing that they know absolutely everything about the markets. They've got all the abbreviations in their basket, and they can tell you everything about the markets. What they don't know is they've been taught a high probability system, but they haven't actually been taught a strategy on how to trade in the markets. And this is another dark side of trading, another dark side to the industry, is there's so many people out there promoting to you that you can somehow make a whole lot of money out of, let's say, a course, let's say a high probability system, and they'll promote to you that if you've got a win rate, this win rate of 7 out of 10, that you somehow are going to become wealthy in the markets, that you somehow are going to pull a Lamborghini out of a hat, not a rabbit, a Lamborghini. It's going to come out of the hat and it's going to land in your driveway somehow because you've done a course on high probability system with a win rate. Now, the first thing I always tell everyone is, firstly, the market's 50-50, because the market's made up of human beings. Made up of people. It's not made up of squiggly lines, made up of algorithms and bots. It's made up of people. Behind every bot, behind every algorithm, behind every trade is a real human being who's buying or selling a product. It's like walking into a retail store. Somebody's always buying, somebody's always selling. Now, good old coffee. Now, you've been told on a course that you're going to have a win rate with this system. You're going to have a high probability win rate. So this win rate is now going to make you money in the market and help you to pull that Lamborghini out of the hat and park it in your driveway. But what they didn't tell you is that a win rate is meaningless. How's a win rate going to make you profitable? Because if you win 7 trades out of 10, and on those 7 trades that you won $10 per trade, so that's great, you've made $70. And then on the other 3, you lose $1,000. That tells me you made a loss. That doesn't tell me that you've got a stunning win rate or a profit. That tells me you nearly $1,000 in loss. So a win rate is completely meaningless to me. When a guy comes to me and says, I've got a 7 out of 10 win rate, I laugh in his face, because as far as I'm concerned, the win rate's not going to do anything for you, is it? You've got to make a profit in the market, not a win rate. A win rate's something you can probably boast about. I'm pretty sure if you're a scalper or something like that, a win rate is what you need. But that's another thing that I've seen in the market over the 30 years that I've been in the market. I've seen them come and go. I've seen the guys come into the market and promote the scalping, go mad with it. They last a few years, and then you look again and gone bankrupt. Off they go. It always ends in tears. Dollar cost averaging. Seeing it over and over and over again. People come in, you got a dollar cost average, because then you never take a stop loss and you never lose, and boom, look again. They're gone. Bankrupt. Something went wrong. There's always that trade that comes to get them. And the excuse is, but the pros don't have stop loss. Of course they don't. The pros are trading with huge sums of money. They're buying huge sums of shares and pips and points and lots and etc. They can't have stop loss. They can't have a set stop loss in the market. They know what their limits are. Believe me, they have a stop in their minds. They know where their limits are. They know where they're going to sell if they need to get out of the market. Trust me on that one. The pros are not idiots. They know where's a good spot to get in and out of the market. So you sitting there thinking, oh, the pros don't have stop loss, so I shouldn't have a stop loss. Yeah. Well, you know, and the problem with the scalping problem is pretty straightforward as well. The guys make quick wins, quick wins, quick wins, quick wins, quick wins. But if you want to be successful at scalping, you've got to have a 100% win rate. 100%. It's the only way you're going to make money. The only way you're going to win at scalping is if you've got a 100% win rate, because that one loss is going to wipe out all your wins from before you got to the loss every time. Or you could have really good risk management, which means you're not really scalping. You actually have a strategy, because if you have a strategy, you're not scalping. You've got a strategy, and your scalping is just a high probability system that you're using to get to a means to an end. You see, you've got to separate system from strategy. So those scalpers, for example, that have a system and a strategy, they'll be okay, because they'll probably have a risk management system in place. They'll look at their trades, they'll organize their trades, and they'll have a means to an end with the strategy. Just like we do with our swing trading. We're not scalpers, we're swing traders. So in other words, we put a trade in with a long-term point of view to making a profit on a 4-hour chart or a 1-hour chart or a day chart. So we're looking at a longer term profit with a higher risk and a bigger level. So we've got quite a lot of space to the stop loss. We've got quite a lot of space up to the take profit. And when you want to put your take profit in, guys, do make sure that the take profit is an achievable take profit, not a way out there sort of like wild guess sort of take profit. You see, we don't take 2-to-1 risk based on just it has to be 2-to-1. That's not how it works. That's just pie in the sky. You actually have to look at your risk to reward and say, if I have this $1,000 risk, can I make $2,000 on this trade? Is the risk to reward there? Does it exist? Is it something I can actually do? Look at the chart, look at the history, look at the high probability. Is it an achievable trade? Because otherwise the market's not going to give it to you. The market's going to be like, well, you know, you said you want that, but you're not going to get it because we're never going to reach that target. The same way I look at my stop loss. So for example, when you go into the strategy that I show you over and over and over again in every single video in the past, and we can go over it again here today as well, since we're here, since we're talking about it, but the strategy is pretty simple. You look at a trade and you say, where do I want to put my stop loss? I want to put it at a spot where I don't think the price is going to reach, where I think, ooh, the price hasn't been there for such a long time, and the possibilities of it getting there are pretty remote. That's where I want my stop loss. It's called an invalidation area. So now I put my stop loss in the invalidation area, and then I work out my 1% risk on my account, because that's what we do. We take a 1% risk on the account. And if you're not sure about it, go watch my previous videos, and I go into much more detail there about the strategy. But now I've decided it's a 1% risk. Let's say it's a $100,000 account, so that would be $1,000. So I'll work out how many lots can I buy for $1,000 back up to cost. How many lots can I put in there? And then that works it out for me. Let's say I can take 0.2 or 1 or 10 or whatever the case lots to make up that $1,000. Then I look at the trade and say, I'd like to make 2-to-1. If I look at the chart, will that 2-to-1 fit within that risk scenario? In other words, will the chart or price be able to reach that 2-to-1 with relative ease? Not with relative difficulty, with relative ease, because I've put my stop loss quite way out and I need to be able to reach the profit. In other words, the risk to reward has to be on your side for these trades to work out. Because look, let's be perfectly honest. There's no point in risking $1,000 to make $50. What is the point in that? Because you're going to make $50 10 times and you're going to lose $1,000 once and you'll be $500 in loss, won't you? Simple maths, guys. I know I told you the stock market's not made up of maths, but you do need maths to trade, and you do need to be able to work out these small calculations. I'm not talking rocket science here. I'm not talking rocket science maths. I'm just talking work it out for yourself. Now that you have a risk to reward and you have a risk to reward trade, the easy thing to do is then to work out your plan as to how you're going to take those profits and how you're going to take those losses. And if you want to know more about that, go and watch my previous videos. I'll go into detail on how you can follow the strategy in to make your money. But you see, this is the dark side of trading. The dark side of trading is that most people will tell you that all you need is a system, that all you need is an indicator or two, or a system that's going to give you a win rate. So you follow that system that's going to give you a win rate, and you win a few trades, and you've got no real plan, except for the fact that you're winning these trades one after the other, and you win and you win and you win, and you think you've got the greatest system on earth, and then you take a loss, and it wipes out all your wins, and then you come back and you say, but why am I losing? Why aren't I making a profit in the market? What's going wrong with my trading? And what you don't understand, and what they never ever tell you, is it's not the system that's at fault. It's you. Every single system that's available out there to you, every single course, every single little thing in the market that teaches you how to trade, do you know what? They all work. Every single one of them works. Every single one of them's been back tested by someone. Every single one of those systems actually works. That's the sad thing. So what's wrong? You are what's wrong. You are the only factor in what's wrong with your trading. In other words, your psychology is wrong, you're doing something wrong, you're taking the trades at the wrong time, you're getting in and out of the trades at the wrong time. It's you. It's simply you. And why is that happening? It's normally caused by fear, it's normally caused by FOMO, and it's normally caused by general psychology. It's not caused by technical ability. I did a little survey the other day where I asked you guys, what do you think is hampering your trading the most? And I said FOMO, fear, technical ability, psychology. Most of you said it's strategy. And strategy is part of FOMO, fear, and psychology. You know, the least amount of people voted for technical ability, because every single one of you out there believes that you have the technical ability. And do you know what? I agree with you. Every single one of you out there has the technical ability, because I can teach the system the technical ability to a primary school child. Anyone can learn the technical ability. 4-year-old can learn the technical ability, but it takes a real special type of psychology to master the actual trading game, the psychology behind the trading game, the winning and losing behind the trading game has to be mastered by someone who has been there and done that, sold the t-shirt. This is not something you're going to learn overnight. This is not something that you're going to pick up in a day. I know there's a lot of people that will promote to you out there that the system will make you money and you'll make a fortune in a day or two and you can turn $100 into $1 million. But the bad news is you're not. The bad news is it's going to take you a long time to learn how to trade. The bad news is you're going to have to figure this out for yourself. The bad news is no one can teach you how to maintain your psychology. You can learn from us what we tell you. We can tell you, look, psychology is this, fear is that, FOMO, sit on your hands, be patient, don't follow trades, don't revenge trade. We can tell you all these things. We can teach you all these things in the market, but we can't make you do it. That's up to you. This only comes with practice, time and practice. Ask yourself this question. Why, if you have a demo account and you're on a course and you're on training, do you do so well and then you go home or go to your office or wherever it is and you start trading with real money or your account, suddenly it becomes insanely difficult. Ever wondered why it becomes insanely difficult when it's real money or your money? It's because of the fear. It's because of the FOMO. That's all it is, guys. Nothing else. Psychology behind it. That's all that it is. Once you master that, then you'll start to figure out how to get this right. Now, one of the big things to learn that'll help you to make it easier in the market is don't trade more than you feel comfortable with. In other words, look, I know if it's your first day trading or if you're a real ripe beginner, I mean, every dollar will make you sweat. I mean, even if you're losing $1, you'll be like, oh my goodness, you'll panic. I understand that. So when you start out, start extremely light, or maybe just get a good feel for it with a good demo account. But once you get into the trading and you know a little bit about what you're doing, do yourself a favor and don't trade more money than you can sleep on, let's say. Not than you can afford. But if you trade $100 or you risk $100 on a trade and you can't sleep at night, you've traded too much. So reduce it to $75. And then if you still can't sleep on it, reduce it to $50. Do this. Put a trade in and then leave the chart alone. Walk away, go and do your shopping. If you're comfortable enough to do that, the trade's the right size. If you're not comfortable leaving it, if you're not comfortable going to the shop and leaving the trade, guess what? You've traded too much. So your risk threshold might be $1,000. It might be $500. It might be $10. It might be $5,000. Who knows what your risk threshold is? Some of the guys out there are extremely high threshold traders, high risk traders, and some are extremely low risk traders. It depends on your risk threshold and how much you are prepared to risk. But test yourself. Test yourself on the amount that you can put in as risk and walk away and leave behind. What I mean by this is not sitting looking at the chart. In other words, take a swing trade, because we're swing traders, we're not scalpers. Come on, let's be honest. Anybody who's following my channel should be a swing trader or a position trader, not a scalper, because that's not what we do. We swing, we put a trade in, we make a decision, we put a plan in place, we say that's our stop loss, that's our take profit, we're taking this trade, that's our plan. So the plan is we take that trade, we put the stop loss in place, we took the take profit in place, and we walk away. Walk away and leave the trade. If it loses, it loses. If it wins, it wins. If you can't walk away, you've got too much money in the trade. Now remember, you're not just going to take one trade, you're going to take 2, 3, 4, 5 trades. That's what I do. I'm sitting with 5 trades at the moment on the funded account. For you guys, I'm sitting with 7 or 8 trades on my cash account. It's a lot of trades. It's a lot of trades. And a lot of those trades are different. I see a trade, I take it. I don't count how many trades I got. I don't worry about how many trades I got in the market. I don't limit myself. I must take so many trades per day or not. I really don't care. I've got a target for the year on profit, and that's it. So what I do, I see a trade, it looks good, I take the trade. Trade goes into the market. But I'm able, with the amount that I trade, I'm able, with the risk that I got in place, to walk away, come back, and see how the trade did. The size of your account remains the size of your account. Guys, if you make a profit, any profit, take it out of your broker's account and put it in your bank account. That way, if you come back one day and the broker's gone or the funded market account is gone, if you want a funded trading account, there is one in the description, by the way. Very handy for guys who don't have the money to trade. I get this question all the time. Rob, can I make a living out of trading? My question to you is, do you have enough money to make a living out of trading? Because if you open a retail store, can you open it with no money? Probably not. If you open a workshop to fix cars, can you open it with no money? In all likelihood, probably not. You're probably going to need some money. Even if it's just the deposit for the building and some tools. You're going to need some money. Same thing goes for trading, guys. You can't just get into trading with no money. If you want to make a living from it, you need some money. These guys that are telling you can do this with $100, they're joking, man. They're joking. They're making money out of their course or whatever the case, but most certainly not trading. You can't make money from trading with $100, guys. You need a good $100,000 to put in the account to make money. So if you don't have that, you can get a funded account. You can pay a couple $100 for it. There is a link in the description. Go and grab it for yourself. And with that, you can now go and make a profit and take profits off that. Now, those type of accounts, especially those type of accounts, if you make a profit, take the profit out immediately, because there's a lot of controversy around these types of accounts. And you arrive next week and the place is gone or they shut down or whatever the case. I've heard people crying that they lost $100,000 in a funding account. I'm like, that's insane. How did you even leave that much money with them? I mean, if I make a profit on a funded account, I want it today. I want it now. I'm not waiting. I want it out of there, not leaving it with you. That's for sure. I'm getting it out of there as soon as I possibly can. And then the trick is to keep the account size that you have the same. So even if it's a cash account, if you put $100,000 in the account, don't let it grow to $500,000 unless you want it to be that size and you want to trade that size. Leave it at $100,000. If you make $20,000, take it out. Take it out and keep the account size the same. That way, if anything happens to that account, anything happens to that company, that's the risk. The risk remains the same. When you decide that you want to increase that risk and you want to make the account bigger, then you do so with the money that you've made or the money that you have. Keep the account size the same. Don't let it, it's not a bank. The bank is your bank. The trading account is your trading account. End of story. Keep it like that. Keep it separate. Guys, I'm rambling on now. I'm going to leave it at that. This is the dark side of trading, guys. These are the things people don't want to tell you. People don't want to watch my show as much as others because I don't tell you you're going to make $1 million in a day. I don't tell you you're going to drive a Lamborghini. And I tell you that things can be quite difficult when you're trading. And it's a tough game. People don't want to hear what I've got to tell you. I expect that this is where it goes and this is what you get. The message is out there, guys. Understand that this is not a game, that this is not a free ride. This is hard work, and you're going to have to work hard at it if you want to succeed, just like anything else that you want to take on. There's no free ride. Thank you for watching. Don't forget to watch my last videos, which tell you so much about the strategy. Join us for the live shows. Tomorrow we got another live show on. Join us for that. Come and be part of the team. Join as a member as well and be part of the A team. Get the trade of the day every day that I go over the markets and I have a look at my stuff and what have you. Join us on the live shows and have a bit of fun and get out of that loneliness, because it helps to have people around you and people to chat to. Thanks for watching, guys. Until the next one. Cheers, ciao, and bye.